Why that did not flip over. All right, let me know if you can hear me all right. You should be able to as we test the mic. Sorry, guys, I am having a problem with my throat. That's why I got coffee with me. All right, someone let me know if you can hear me okay. Should be all right. Okay. So this will be a little quicker than last. I don't even know how long that last one was we just did on NASDAQ. I know I kind of went over a little bit more than just the trade. I won't do that here on Platinum. So this will be a little shorter. I just kind of felt I needed to show a little bit of the difference in the stop losses, or kind of wanted to, of the different traders. And so I am not going, I promise not to do that during this. So what I'm going to cover here is Platinum and when I got in, how I got in. This I actually scaled into. I'll go over kind of why, but I actually scaled into Platform, and I'm going to zoom in actually a little bit more on the chart so you guys can see what more thinking was on it, why I got in, and when I did. All right. So again, this is going over Platinum. I did scale in, and then I did scale out as well. All right, so I'll get right into it. So basically, Platinum was up at 4-hour zones. You know, this zone I had drawn was my upper zone. I had a mid zone, and of course, we have a lower zone that's way down. Okay. So basically, it had been falling off of an upper zone. It fell down. It actually, before I got in it, fell down here as well. So it had been falling through and fell through a mid zone. Okay. This was at 3:42 in the morning. I'm not awake at 3:42 in the morning. Sometimes I wake up at 4 o'clock for whatever reason. As I hear a train going by now, it might actually be a train. It's like a mile or so away, but we can hear it. So I have no idea. Maybe there is, but for some reason, it's like almost 4 o'clock every morning. Well, I don't look to get in and trade. So this was about 3:42 in the morning. You'll see over here, it was, what is this? About 6:30. Or is that, that's a 5, sorry. I'm trying to look way at my other screen. So still before I trade, it had pulled down. I'll just pull right to my entry, which is way over here. So when I got up and drew my lines, originally my line was here. I said to myself, okay, I would have drawn my line here. Over here is about 7:30 in the morning. Okay. So when you get up, you look, you say, okay, where's my trend lines? Well, you take the top up here and you draw down to this high because that's already passed. I mean, this whole up and down movement, you know, right in here has happened. It dropped down throughout the London session, you know, started a London session, dropped down, went sideways, dropped down again, doing what? Breaking the low, move sideways under what? Move sideways under support. Keep in mind your support resistance levels. Okay. And guys, you can go back after the fact and go, well, yeah, I would have had one, you know, because I would have drawn one here. If it'll let me move it down, I would have had mine there. Okay. Well, when it starts doing this, you can look back and go, okay, it's respecting that price right there, and you can adjust it. Okay. We draw it. When it happens, it pops down, pulls back. We draw it off a wick on 3-minute. And then when it comes and it bounces again and pulls back up, well, then you can always adjust your line going, okay, is that the price it's actually respecting? Okay. Because again, when you would first draw it on this push down and then it pulls back, you're going to draw it off the wick. 3-minute time frame, I like to include the wicks. Only 1 minute will I not. That would have been where I drew it. Well, again, it pulls up over, comes back, pulls back up. It turns right there. Well, again, you're looking to the left going, oh, wait a minute. It's respecting that price. Let me just make that little adjustment. And then it makes more sense over here when it pulls down. Now you see, oh, okay. Well, now it's just, boom, it's a test. It's a test. So don't be afraid to move your lines if you have a good reason to. Don't just keep moving them all day long. But if you see something like this, a pull and a turn, it's okay to move that going, oh, wait a minute. It's not this price down here that's being respected. It's actually this one right here that's being respected. Now, I would rather move my line. I'd rather put it off a wick on a 3-minute and move it like that than to not draw it on a wick. So personal preference, I like using wicks on a 3-minute time frame. Only on a 1 minute will I not use a wick. And I tend to not use a lot of wicks on a 1 minute. It just depends on the move. So that makes more sense. Okay, well, now it makes more sense. You know, it pulled down, pulled back and bounced, pulled back and bounced. Okay, pulled down, another leg down. What area do we need to break? So it's in a bearish trend. It pulled through a zone off of a red zone. So we actually had that pull off the red zone. Okay. And then again, London session push, sideways, U.S. market's still not open. London session pushes again, breaks the low. It had just respected here. That's support, support. So old support does what? Well, it tends to hold up as future resistance. So, and it did. Resistance, 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 and then bam, drop. New push down, new extension down past what? Past these lows. Okay. At that point, you can choose to move, move your stop if you were already in. I'm not in. I'm looking for an entry. Okay. Now I got to kind of expand this over. I know my chart's like really marked up over here. So I'm still not in at this point. This is when I got up. So my line, I would have drawn it there and been looking for an entry. However, I'm still not. Let's see, what time am I at here? 7:36. So there's 7:36 right there. So would your trend line be here still? No, it wouldn't, because it was broke here. So this trend line, was drawn from back there to here, actually. It broke through support, pulled back to test the old support as resistance, and then you get a push down. At that point, you have to say, okay, looks like it's holding up. Let's move our trend line out, because we're looking to go short. I mean, so far, as I look at that chart through the, whoa, why is that not attached? Looks like I moved the whole line, guys. There we go. Oh, I got the magnet off. Let me turn that on, or that's going to mess things up probably. All right. There we are. So again, so far, before London session, this is Asian session. Let's see, this was Tuesday at 6 o'clock right here. So that's that gap opened up, pulled down. So you got Tuesday night through, you've got London session drop, sideways movement, drop, sideways movement. I see a pattern. Let's see a drop, sideways, sideways. What do we see? Drop, sideways. All right. So here's where I got in. So I know the charts are going to be kind of messy, but I marked these up as I was trading as the stops move, because this one I scaled in. So I want to trade short. I'm looking to go short. Started the U.S. session. Don't know what's going to happen. Looks to me, I want to go short with the London session. But how many times has the London session been short and the start of the U.S. market changes, turns turns around, goes completely back to where the London session started. A lot. It happens. So that being said, do I want to get in heavy on this trade? I chose not to go in heavy. I chose to go in lighter. Okay. I haven't traded platinum in, I don't know, since last week, I think. I think this was the first trade this week in platinum. I'd have to look back. So I got in at the close of that candle right there, the green one. Okay. So, and if you look at the entry time, my entry time actually shows this candle, like the start of that candle getting in. So I'm not sure why the arrow is back there, but irregardless, I got in on the pullback. So again, it extended past support and resistance. Okay. And you'll see here, this is when I was trading it. I had put my horizontal ray line there and marked it as low to break in test. That was when it was over here. Okay. So, and again, this is after 7:30 or around 7:30, 7:40. Yeah, this is like 7:40, this green candle. So when it pulled back up, I'm watching. Got to be aware of what's going on. I'm not looking at anything else at this time. I'm looking to get in platinum. If I can get in short, London session short, let me trade with that trend. Let me trade with the London session trend. London session short. It's been short all night. Short and then sideways. Short and then sideways. Short. Pretty much sideways. A little pullback, but what does it do? When this pulled back, all it did was retest this support level as resistance. And I had to move my trend line out because it kind of broke the trend line. But remember, the trend line is not alone is not enough to say trend reversal. Because why? Time. And I've mentioned that before. Time sometimes forces instruments to move through a trend line. Because if it's not going to push down and it's not going to push up, which way does it have to push? It has to push sideways. Okay? Simple. So that trend line was down around here. Okay? So when it broke through here, as you can see, it was not done moving short, even though it broke the trend line. What you have to remember, our trend lines are straight. Well, the market doesn't move straight. So again, when it broke through that trend line, is that enough to say, hey, wait, short's over, we're going long? No, it's not. I need structure to build up. I would need to see, when the trend line again was over here and it broke through, okay, again, it's no reason to say reversal. That's not enough. That's not enough to say reversal. Let it test the highs and lows. Let it form some more structure before we make that call. Okay? So I'm not in it. I'm sitting out. When it pushes down, so it pushes down to test the backside of the down trade line. Well, it didn't hold up very well. It went where? It went to support. So when it pulls down back through that line, what do? I move my line. That's going to be my new second point in my line. Has to be. That's the only time you move it, though. After something fails. Okay? Let me move that back over. So again, it's here. Goes through. Not enough reason to say structures, boom, we're out. We're in long. It's a reason, when it breaks the trend line, it's a reason to watch it closer, but not a reason to jump in long. Okay? It's just a reason to maybe pay a little more attention to it. Let's give it the attention it deserves because it has broke a trend line, but we need to see structure build up in the opposite direction. Right now, through the London session, it's been bearish. We've had bearish structure, lower lows, lower highs. It keeps breaking short. So again, breaks trend line, boom. We're not saying, okay, reversal. What we're saying is, let's watch it a little closer. Let's really watch these moves and seeing the how it's moving. I'm trying to read the comments too. Yeah. And that's the thing. You're also watching the support and resistance hold. So what we're looking for is after it's broke this down trend line, we're actually watching it to pull down and see if that holds up as support. If it were to have turned here, you know, a couple green candles in here, well, then we'd say, okay, the back of the trend line's being respected. That's a new support level. And boom, what would that be? If this next candle, instead of red, these two would have been green pushing up, well, that would be a higher low. That would give us a reason to really watch it. Okay. So no, I wouldn't take it long until it forms a higher low. I have to see it form a higher low. And that does mean that I give back extra on the reversals when it changes. And I'm fine with that because my runners normally override what I lose out on this. So again, if it would have given me two candles here, then I'd say, okay, higher low, it might be bullish. I would wait for this high to be broke because you could see it held up here support. I would actually wait for it to go through. So for me, I'd want to see again, kind of sideways here, a couple candles. I got the stupid magnet on. A couple candles here up. And then once it breaks that high and tests it and green candle, that right there is where I'm in long. So again, there's some traders that get in on a trend line break and they have to sit through the pullback. Other traders wait for the pullback green candle here, or you wait for full structure to build. So there's three different traders in this. So we can make up all the rules. We have a checklist. One trader gets in on trend line break. Would have taken that long. Well, he had got stopped out and been wrong. All three of them would have. But this is if it were to turn. So one trader will take that long. Okay. Another trader will wait on a pullback and then green candle in here would have gone in long. He gets in typically at a better price, less risk because his stop is here. Okay. Let's say the trader getting in here, stop down here. Trader getting in, if there was a green candle here and the trader got in, his stop would have been here, less risk. Okay. He could put on more contracts. So that's the thing. You put on less contracts if you're taking a trend line break. And then the other trader, which is me, I like to see it pull up and pull back down. And I want to see that full structure. I want to see full bullish structure form. In order to do bullish structure is not just, you know, if it formed a low here is not just a higher low. I need a higher high too. And a test of that, which would be if it pulls up through this level, higher high, pulls back to test it, gives me a green candle, I'm in. That means I'm giving up some of the beginning, the early stages. This guy getting in on a green candle, this guy, they would be, if it pulled up through here, they would be in before me. They got in earlier on the move. Did they take a riskier trade? 100%. More risk than if it comes to test support here. So that's the difference in entries. But irregardless of all that, it came to test the trend line, pulled through to test support. I mean, at that point, these candles, you have to say, okay, well, the trend line didn't hold up as support. Okay, it didn't. It didn't support it, fell through it. So let's move it out and see if it's going to continue to hold up as resistance. Does it pull back? In which case it does. It pulls up here. And then what do we see? I got my push through, which is more bearish confirmation that it might continue down. What do I want to see after that candle closes? Do I want to jump in? No. Different types of traders. Again, some take a break of support and resistance, like here. Some will get in on that candle. Some will get in on this candle. Do they pan out? Both panned out. The guy getting in here, let's say he closed partial, like quickly, but he moved his stop to break even, got stopped out. If he left the stop here, stayed in. The guy that gets in here pushes through to support. I don't like getting in on an extension. I like waiting on a pullback. Okay. So getting in here, that guy had to sit through the negative here if he left it all on. Getting in here on the extended move, You had to sit through the pullback. Now, before you even went anything in the positive. So you just have to keep that in mind. Is it okay to get in on extension? It is. Do you have less criteria on your checklist met? You do. What does that mean to you? It means cautious, should be cautious, and put on less contracts. We're trading with the London market, and the morning we see it's been moving down. So we're going to trade short. So we're looking to get in short, 50% reason take trade. Okay. Bounce off a trend line, pulls down through here to break support and resistance. There's another 10% to get in. Pulls back up to test support and resistance, 10% more to get in on a trade. And there's a red candle. I know it's small, but there's a red candle. Either that or that you're getting in on. So again, 50% for taking the trend, 10% for breaking support, 10% for retracement. So you're in 7 and a red candle. So you're in, what is it? 50, 60, 70, 80% taking the trade. That's a good percentage on there to take that trade. Okay. So I would take that trade all day. I only had 80% reason to take the trade. What does that mean? Well, according to my rules, that's on my checklist, and you guys know on that checklist, I changed it to actually add, I think I did, your contract sizes in, A, B, C, D setup. 80% is a C setup. Okay. It's only 80% reason take trade. 90 would be a B and 100 would be an A. So at that point, I'm not at 100% reason take the trade. So less contracts. Okay. It's going to be less contracts. So I'm going in with 20 on a trade. So on this one, I put 5 on. Is the move over? I don't know. I mean, this was almost 8 o'clock in the morning. There's news coming out too. So is it a riskier trade? I'm getting in at 8 o'clock in the morning. I'm going with the trend. So I feel pretty safe. I wait on a break of support resistance. I wait on a pullback to test that support level as resistance. Red candle, boom, 80%. That's good enough to get in. But I don't know if it's exhausted. I mean, it moved down through the London session. And again, how many times have we seen it completely turn around and go completely back? Okay. Yeah. And you're watching that trend line, and that would be, I'm trying to read all that text. For some reason, I don't see it all. All right. Yeah, you can do that the same. So what's being asked is, do you pay attention to an entry being far from the trend line? And that is something. We do want it to be near the trend line. The nearer it is to the trend line, the safer we are. And I don't call them safety lines, but I know you guys know someone else that does. But the closer it is to that moving average or the trend line, then the safer you are. It's the best price you're going to get at. Okay. Because if it's way like here, right here. So this pulls down. If you get in on that, how far are we away from a trend line? Well, originally the trend line was like right in here, but it pulled back to what? It pulled back to the trend line. So the further out away you are from the trend line, just like here, guys, I got in and it went down. Well, what did it do? It retraced over to the trend line. I mean, it's going to come back like a rubber band. And that's what we want. We want it to pull back. We want the bounces. So to me, 80% trade. So I scaled in. I got in with 5. I went in light, knowing that I could scale in, build to my position, and then scale back out. So what is the trickiest part of scaling in? Because at some point I need to start closing partials. The trickiest part of scaling in is knowing when it's the last time that it's going to go that direction, and you probably shouldn't scale in again. And you don't know. You never know. So I typically will only build to a position, like build in 2 times. I don't know if it's going to trend all day. If it's going to trend all day, I can close out on an extension. On a pullback, I can get back in. I don't know if that's going to trend all day. I like to go in twice to build my position. Then I like to close out partial if I can. What happens is, and I've tried them all day long, and you guys feel free to try them. Definitely go take a day like yesterday on NASDAQ, anything. Take a day like yesterday on anything, Russell, NASDAQ, gold, Bitcoin. Take a day like yesterday, even here on Platinum, go back on replay and scale in. Start from like here, 8 o'clock in the morning, if that's when you're trading, US session, start from here, scale in. So as we look ahead to the chart, and as I go over this, what I want you to think of is, would you have scaled in again and scaled in again and scaled in again? Eventually, as you keep scaling in, you're going to throw one more contract in on a pullback, and then it's going to reverse. But you're locking in profit the whole time it's going down. And I've done this time and time again. Here, what was that? I think we got market closed or something. Oh, that was on the top step. Let me check on something. Sorry, just wanted to check. I'm on a Bitcoin trade in Top Step. All right. So again, scaling in is fine. You can keep scaling in. Eventually, one of those times you scale it, you're trying to build a big position. And I've done this time and time again because your order moves down as you go. So the problem with that is, as the order moves, since the order moves when you add on to the position, your stop doesn't cover the whole order necessarily. And you might suffer a loss against the gains you've locked in. You have to treat it as one whole trade. Just say to yourself, that loss that shows, from say today, is because I added a couple more contracts to my position. My position moved down. I wanted to leave my stop where it was. And unfortunately, it was time for a reversal. I didn't know that, but it was time for a reversal. And it reversed back, and okay, thanks. It moved back, and then it decided it was going to reverse. I didn't know that. So that last contract I put on, I shouldn't have. But how am I supposed to know, right? You're not. You're not supposed to know that's the last time it decided to push down and pull back. And you get in, and then it breaks your trade line and turns, gives you bearish structure and goes the opposite way. You took a loss, but you didn't know that was going to be the last time to scale in, did you? There's no way. We don't have a crystal ball. So you just have to say to yourself, I'm going to keep adding on. Make a rule ahead of time. This was not planned out right when it got here. I have a rule for scaling in. So just as my trade strategy, so we have entry criteria. The entry criteria was 50% for it's going down, 10% because it broke support, 10% it's testing, support is resistance, okay? 10% red candle. So multiple reasons to get in the trade. It's not 100%. My rule of thumb is I'm going in light. If it pushes and moves down, I can scale in if I want to. And I love building heavy positions if I can. Why not? If the market's going to move and continue in one direction, why would I want to put on 5 contracts and let it go and go and go and go for days and never add to that position? And just never add, just leave it alone. Am I doing myself any justice? No. I'm doing myself a disservice if I do that. So I love building in to where I can get a heavy position. Now, I don't remember what it was. It was like a month ago, and I want to say it was platinum. It was platinum or gold, And I just kept building. It kept pulling back, and I kept building and building and building. And I was only doing 3 at a time as it pulled up. And then the last time it pulled back, guess what? Well, I had a red candle. I threw on 3 more. Well, guess what it did? Broke the trend line, tested the back, went up, broke the high. It changed direction. And that was right after I threw 3 more on. But my position was heavy overall. I was already making profit. So I was okay with that. Just throwing those 3 on, those 3 by themselves were in a negative position when it turned. And I'm okay with that. That's giving back part of my gains, but for a chance that if it keeps going, I'm in it contract heavy. Okay. So here's where I got in. It pushed down. I did not close any out. So these are the orders. Because why? I'm not closing out partial. So there's two ways you can do it. You can go in light, 5 contracts, and you guys adjust this to whatever you're doing. And pretend it's on micros if you're doing micros. Well, you can't do micro platinum, so forget that. But think about if you're on gold or whatever you normally trade. Think about this is you. Again, you don't have to look at this as being platinum. Look at this as being any instrument you trade. That's what you need to focus on. I'm showing you this on platinum. You don't trade platinum. That's okay. You need to be looking at the moves. Okay, the movements of what's happening. Take this over to any instrument you trade, and you can scale in, scale out. Okay, so just pretend like you're trading whatever. It could say anything right here. It could say gold, Russell, oil. Okay, I don't want to leave anybody out. Bitcoin, you know, it could be anything. It could be the Japanese yen, the euro. Just pretend that says something else. Look at the mechanics is what you're looking at. So again, I got in with 5. I was going to add to my position. I want to add as a whole. Okay. Actually, I have traded natural gas twice this year, and that's it. So I have not traded that a lot. I just experimented with it, traded it twice, and then kind of moved back. Because I'm already trading so many things, it's just not something and copper, I've looked at copper too, but haven't really settled on even trading that. They all will trend when they trend. And unfortunately, you don't know which is going to go when. You've just got to get in and get your little piece of the pie. So again, we're looking at the mechanics on that. So again, you could, if you're trading with a smaller account, you could have put on, I don't care what it is. Let's say it's 3 micros. You put on 3 micros, it pulls down, you close 2. You have 1 left. When it comes over and bounces at a trend line, you can always add to your position. So I added 5. It pulled down. I did not close any. Didn't close any. You'll see I've got a 4-hour support resistance level. I knew getting in here, we were at a 4-hour support resistance level. However, again, we pulled down off of a red and yellow zone. There's the 2 zones it had pulled off of. Pulled down through or bounced off a red, pulled through yellow during London session. And here we are, US session. So I'm trading with that momentum, with that trend. So I put on 5. It moves over. I actually shorted here when it pulled back. Now, something was here that I took off my chart. I had a retracement line drawn like that. All right. When it broke that, I went ahead and threw on 5 more. I did not wait for a pullback. A little riskier entry. I'm okay with that. Why? I have 5 on back here that's in the positive. So I have 5 lots I put on here, 5 contracts, sorry, that's in the positive. Even if it pulled back, if it would have pulled back to my backside of my retracement line and the downtrend line here, if it would have pulled back to that area, would I have been fine with that? Sure. Look at where my entry is. Now my stop was on up. Here's my original stop was right here. I did it off the current level when I got in here. I went back to the current high on that one. I felt pretty safe in this support and resistance level and the fact that the London market had been going down. So I went ahead and went with a tighter stop, less contracts. Okay. So when it pulls back here, I actually added 5 to my position right there. And the price moved here, right to the bottom of this thing here. Okay. But it had broke through the retracement line. All right. Broke through the retracement line. So I went ahead and added 5 more. Did I add at the best price point? Overall, sure. It pulled back to kind of test that level again. Red candle. I mean, I could have got in there. Did I get in early? I mean, I didn't wait for it to pull back up to the trend line, which it never did anyways. It pulled back a little and then went. So that's something to keep in mind. You can't always know when it's going to break a retracement line and just boogie, just keep going down. That's what I thought might happen. So I went ahead and added, knowing that if it pulled back, if it retraced back, I'd be okay with that. Notice that the blue, these are paired by color. So there's my original entry was here. My original stop. And then, original entry was here. My original stop was above this high, current high. Now, when I added 5 contracts on, the price moved to that end of that. Let me take this retracement line off. Or just kind of move it. So right there at the end of that tail, that's where the price moved. I didn't notice it does not say stop moved because I didn't move my stop. My stop I left up here. I'm giving it room to breathe. Now I finally have room for it. Up here, I didn't. Up here, I got in thinking, okay, this support level it hit twice. Let's see if that holds up. I did a tight stop. It went down, got in on that, added 5 more, knowing that's why I left my stop out. Because again, my price moved here. Can you imagine if when I added 5 contracts, again, my original entry was right here. When I added 5 contracts to that, my order moved down here. Right here. So can you imagine if I move my stop to break even on the whole trade? If I would have moved my stop down to that to cover that price on the whole trade and it pulled back to test the trend line and then to go, I'd have been a little upset. Wouldn't have been sitting easy with me, right? Because it pulls back and you're saying to yourself, it barely pulled me out. So again, I didn't move my stop. I gave it the room. I was okay. The 5 I put on here were covered so far with the profit that I was up. Okay. Only here at this red candle did I get a little sigh of relief because I had that. So this candle here, I'm thinking, okay, awesome. It's not going to retrace back to the trade line. It could have. After that candle, it still could have pulled back and we'd be okay. Now, again, when it extends past what? When it extends past the previous low, here's your previous low. When it extends past the low, it is making a what? New low, lower low. We can look to move our stop. So on this red candle here, I did 2 things. On this red candle here, I added 5 more. There's my second addition. Remember I said I like to go 3 times in. This is all strategic. It's not, I'm going candle by candle. This candle broke the support level. I did 2 things. I added 5. Did I wait for it to pull back? No, I didn't. It never did. Am I glad I entered 5 more there? Sure. If I waited on it to pull back, what would that have meant? So if I would not have added 5 here, if I would have waited for it to pull back, it just never pulled back. I would not have had a chance to add my 5. Would I be okay with that? Sure. The market is going to move. I don't know what it's going to do. I just have to say to myself, I'm adding on that break. I added on this break. I was already in with 5, which is covering them all. Right now, when I added 5 here, I'm in with 10. So the 10 I have on is covering. What did I do at that point? So, oh, and when it pushed down here, when it pushed down here, I actually moved my stop manually to right here. I did. When it pushed back down to support, I thought, I want to push it in. I just felt like I wanted to move it down. So I did. I moved it tighter. Now, sometimes that'll bite you as it pulls back and takes you out. But I saw, it breaking this level in here. It's testing that. And I just thought, I want to be safe. This was a little riskier entry I felt back in here, but I was trading with the trend. So at this point, right here is when I added the 5 contracts, okay, to that price there. My order moved here, and I moved my stop loss here, right around in there. Okay, so again, price went down, added 5 contracts. Because why? Because it broke support. Breaking support means what? Continuing bearish move. Let's add 5 more on. Oops, the order moved down. It's going to happen when you scale in. No big deal. The order moved here. I pulled my stop here. I'm in at 15 contracts at this point, and it's all protected by my stop. So right now, I've let the market move through this whole time. What time was this? This was 9 o'clock. That was 9 o'clock. The entry here was 7:58. So an hour. So in an hour, it's moved enough where I have 15 contracts on. I'm sitting that's pretty heavy, on platinum. You're sitting 15 contracts on. If it's micros, well, you can't do micros on platinum. I don't care. Like I said, pretend like it's gold or NQ or anything or oil, and you're only doing 2 contracts or 1 contract. You could be trading with 1 micro on an instrument and get in with 1. It pulls down, pulls back, breaks. You add another contract. You're in with 2 micros. It pulls down, breaks support. You get in with the 3rd micro. You've moved your stop. So what has that trader done? That trader's done the same thing. It's just a different contract size. So as I'm showing you this, don't trade this size if that's not where you're at. Trade with your own size, but just keep that in mind. Remember, we've covered that. Stay in your lane. Are you trader 1, 2, or 3, or 4? What lane are you trading in? Well, when you're starting out, you're only trying to make 100 or 200 a day. You're in lane 1. Stay in that lane and trade accordingly. You could scale in on these 100%. And I think if you look back at the last couple of days and see, could you have scaled in? Go back and look at yesterday on pretty much any instrument. Could you have scaled in on a micro account and just put on 1 contract? Add another later. Let the market move. So when I added 5 here, a trader doing 1 micro here with the stop loss up here, when it pulls back and goes down, that trader can add a 2nd micro on. Okay, you could even move your stop if you want to protect some of those gains. It pushes down again. You add 1 more micro on. You can move your stop to, like I said, manual here, or add it. I added here, move my stop there. So if you added 1 here, if you did 1 micro, 2 micro, 3 micro, when you added a micro here, or here, sorry, you added a micro here, your order moves down. Your order's going to move just the same. So you added 1 there, 1 there, 1 there. Your order's going to move, but you can move your stop to break even. Okay, your order moved there, your stop, you move here. What does that do for you? Well, you're in a 3 micro trade. Okay, you're built into your position twice. You've moved your stop to protect against any loss at all. And we'll see if it goes. You're taking that chance. And you may only scaled in once. Got in there, scaled in there. That's it. It doesn't matter. But you can scale into these no matter what size you're trading. Okay. When it popped down, you'll see right here, I did not do anything on that candle. This 4-hour support and resistance level was already on the chart. It popped down, wick down, 3-minute time frame, closed up. At that point, what am I saying to myself? This is great. It's probably not going to go any further. It's at a 4-hour zone or resistance level. I could see it retracing all the way back up to this high, or maybe deeper to this high. But ultimately, I could see it pulling back to my down trade line. Testing this support level comes in contact with my trade line over there. Could you see it hitting here and going all the way over there, or going up and down sideways? Yeah. So as you're looking at each candle, and this is kind of why I've settled on the 3. 1-minute time frame is great for news. It is disastrous to try and sit here and make a decision. You got 1 minute. This candle, I don't know what it looks like on a 1. I'm not going to flip it. I don't trade a 1 on these entries. We're trading 3. I know the 3-minute candle closed up there. That gives me 3 more minutes to make a decision before the next candle closes. So the next candle opens. So while this candle's forming, the big red one, while it's forming, it goes down below the 4-hour support resistance level. I'm thinking, great. It's broke. It's popped through the 4-hour support resistance level, but I have to wait for it closes to make a decision. It's just my rules. Wait for candle close. That's why I put in there yesterday how many people hate to wait for a candle close. I think we were about 50-50. I don't know how many people. I think only 8 people voted on it. So waiting on the candle close, because to me it looks great. Looks like it's broke support. And I thought, I'm thinking about closing. Okay, now I only have 15 on. So with 15 on, I'm looking to close 10. I want to leave 5 runners up. Well, the candle closes here. Next candle up. Next candle pushes through 4-hour. I've got hope. So as that candle pushed down, I've got hope that it's going to stay below the 4-hour support resistance level. It does not. By the time the candle's done, up. So on this third push, it pushed to the 4-hour. I'm like, boom, I'm out. I closed out 10. Now, this is what I was looking at. I didn't see that next red candle that's long. I'm looking at that. Okay. So boom, I closed. Okay. I don't know. I didn't know that it was finally going to break. Look at this candle. This one pulls back, bullish side of the market, kind of kicking in. This candle, bullish side of the market, actually has control on this candle. It shot down for a while, but the bullish side market has control. Next candle here, it barely got to the 4-hour line. And then the bullish side of the market kicked it up. So to me, it looks like we have some bullish control during those candles, which we did during the pullback. However, it just didn't hold. Well, I didn't know that. So I closed out 15. That's where I closed out 15. And I'm okay with that. Am I okay with closing out 15 there? Or 10, sorry. I have 15 on. So we put on 5 here, put on 5 here, put on 5 here. Am I okay with closing 10? Yes. And it doesn't matter how you look at it. You could look at it as I closed out 10. So I closed out the first 5 here. That's a good gain. Closed out the second 5 here. Good gain. It doesn't matter. If you look at, I closed out these last 5 and I closed out these 5, but I have these 2 runners on. It really doesn't matter how you want to look at that. Okay. But am I okay getting out there? Sure. I had my reasons. Was I thinking about the moves? I was 100%. I thought about the wick breaking, but the candle closing above. Thought about the wick breaking, but the candle closing more bullish. Thought about that wick not even hitting the 4-hour support resistance level and actually going above that candle high. I was thinking about every single one of those candles. That's the focus. That's the focus. So did I have a reason for closing out 10? I did. I thought in my mind, because I could see it happening that we might get something more like this. You know, either breaks through or goes up, doesn't really matter. But that's what I was seeing a potential for it to do. So I closed out 10. I didn't want to sit the whole trade through all of this. So I didn't close out 10. Do I look back at that and go, well, you should have held? Sure. Would I have been in a more profitable position? Would I have closed out here at this red candle? Sure. I could have closed out that red candle. I didn't know it was going to happen. So I could have closed out 10 down here, but I had already closed out here. So that is gone. So don't kick yourself too long. Do I say to myself, yeah, and you learn from it. Again, you learn, okay, I was wrong. It did not stay bullish and go long. Could I have held on for the next push through? You know, this one still, though, guys, that closed right at that support and resistance level. That's powerful, the 4 hours. So would I have held there? I might have actually just closed out the 10 there, thinking, well, it's made another push and closed. Bam, I'm out. It depends on if I would have held there and then this opened and quickly shot down, you know, then you're closing out somewhere in there. But again, after the fact, just brush it aside. Okay, just brush it aside. Yeah, I missed it. Okay, I could have closed out the 10 down here somewhere as it's pushing down. Hindsight is great for trading. Looking, going, man, you should have held it all. Well, when you're trading, you're looking at the moves and you're making decisions off what you've seen in the past. And that's what I was making a decision on. I've seen tons of wicks like that hold, you know, and then it pulls up. That's what I was making that decision on. That's why I closed. It goes down. Let me take this off my chart because this was not on. So as of this point, again, I've closed 10. So 15 on, closed 10. I have 5 runners. We're in the positive here. I did not close any out on that. But what's it near? It's near a 4-hour zone. My stop's way up here still. So at this point where it pulls down, I did not move my stop. I'm not aggressive with my stops. I will during news on a 1 minute, but typically on these other entries where we're looking at good setups, if I have reason to take trades, my criteria is there, I'm going to write it out. My stop was still up here. Stop still up here. And it's above, you know, as it's pulling back, my stop was above the trend line. It was up here. As it pulls back, and who was it? Platinum. It might have been Platinum. I'm not sure. We were talking about if it breaks the retracement line. So as it moved up, it hit a 4-hour support and resistance level. I did not add to my position, but that's what I'd like to add to. It pulls up here, turns right around where? The support resistance level, 4 hour. But this green candle went through. And then we get this one. This candle here even shot up. Okay. I didn't add to that position anywhere in there. It closed below. Red candle breaks a retracement line. So what are we looking at for that? There's 2 ways to enter. You're either going to enter on the break, that break, or next candle's over, looking for a red candle, or you're going to let it pull back the backside of the retracement line. You're looking for one of those to get in. Okay? Still trading with the trend. So this is if you're looking to get back in. So what have I done so far? I put on 5, put on 5 more, put on 5 more. We're at 15, closed out 10. Not the greatest. I mean, I got great gains on the initial 5, got decent gains on the second 5, got 5 left, and those are on there. Didn't move my stop. Stop's up here. You'll see where price hit here. And I'm just going to call it hit there. I don't know if it actually hit that point. We can look and see. I know someone's out there going, but did it really? Not quite. So even the guy moving his stop to break even didn't get taken out on that, but got close. Okay. But it had a healthy pullback. Okay. So we're riding the pullback on the 5. But remember, we got in 5 there, 5 there, 5 there. However you want to look at it, we closed out that 5 and that 5, or we closed out this 5 and this 5. I like to look at it as the second, like this. So if I would have only closed out 5 here, that's a bonus trade. It's this one. Put 5, close 5. If I'd close out the second 5, that's this trade. Close out. My original trade is back here. That's my original entry. That was my original criteria for getting in. If I would have had a higher criteria, I would have put 20 on instead of 5. So I like to look at it as my, that's my entry. How long are these runners going to go? And when I add in and close out along the way, those are just bonus little mini trades because I still want to trade. I mean, I just don't want to put that 5 on and let it go. I would still like to jump in again, like here. Do I look at that as being a good place to put in another trade? Trade it where? Trade it down here. And that's why I have this down here. So when it broke, I'm looking to get in short again. I'm looking to add to my position. I have 5 on. I'm looking for another trade. I closed out 10 here, which closed out this one and this one. Still have my original 5. I'm looking to get in again. Well, to me, it's pulled back toward the trend line. We had a healthy pullback. It's tested this 4-hour support resistance level. It kind of wiggled through it a little bit, but it pulled back down. Break of the retracement line. I'm thinking, oh man, I'm looking to get in. Where should my first target be? It should not be to the 4-hour zone. The 4-hour zone is a great target. I'd love to see it get, if I get in now, I'd love to see it, absolutely love to see it go to the 4-hour trend line. What's in the way? This right here, this past low. Look at this nice big swing point. Huge move down, decent move back. Over 50% pullback from this move down. I just look and it's over 50%. So about the 61.8 level if you're using fibs. I don't know, you can measure it, mark fibs. That's probably about 618 level. So where's my target? Inside of this turn. Now I went ahead and marked the wick. Can you mark the bodies? Sure you can. Just I have 2 wicks, that one and this one. I chose to mark the wick, saying, you know what? If it gets down there, what does my thing say? Inside bottom will close the new 5 that I'm looking to add. I'm going to close them there when it hits there. That's what I put on the line. These are little things that I suggest everybody doing. Don't let your mind try and remember what you're doing, especially if you're looking at 2, 3, 4 different instruments and you're trading them at the same time. Don't try and remember this. Don't try and just draw a line on the chart and say, well, if it gets there, I'm going to close out part. Draw something, write something in. Okay. So that visually, when you come back to glance at this, especially if you're looking at other things, you're going to get coffee, going to make lunch, going to the restroom, whatever, taking the dog out, that you can come back and look. Oh, it's down here. I said to myself, I would close out part of the trade. So right there is where I added 5. This came back a little bit to touch. Nice long wick, red wick candle. You know, it had pushed short twice. I just said, I'm going to get in. Getting in at that, where I got in on that candle, I know that on the new 5 that I just put on, it could still pull back to test the backside of the retracement line, this high, and the trend line. So at that point, on the new 5 that I put on, my stop went up here with this one. That's where it went, right with that one. So the new 5 I put on here with a stop way up here. What does that mean on that one trade? The 5 here, if it would pull all the way back and hit my stop, that would have been a negative part of the trade. Again, we're looping them all together, but we're looking at this one being separate. So I added 5. Did I add at a good price? I think so. It pulled back, broke my retracement line, which is one of my rules. Break retracement line, red candle. It didn't pull back. I'm getting in a little earlier, but how are we on this trade? So we're at 50%. We've been trading short. London session short. Short off the red zone bounce, straight through the yellow. London session kept going short. Start of the U.S. session, we've been going short. We've been in short all morning. Healthy pullback. So we're trading with the trend short, 50%. It's pulled back toward the trend line. That's what we want to see. It's 10%. Broke through our retracement line, 10%. We have a red candle, 10%. That's 50, 60, 70, 80. That's only an 80. We don't have a pullback. I'm not waiting. I jumped in. My stop's way up here. So I'm going to lose from my entry to my stop. Why would I want to get in on that? Well, one, I'm trying to add back in another trade. I only have the 5 on, so I'm trying to add some more. Let's get some extra trade. 2, with where I added the 5 here, my stop's up here. It's on my stop is from my original trade. Remember, the 5 lots here, 5 contracts here. I'm in the positive so far from there to there on these 5 if it hits the stop. So that will cover part of my loss on the new 5. What else will cover part of the loss on the new 5? Well, I closed out and profited from here to here. I closed out and profited from here to here on 5. So this one little trade, this other little trade, and what is locked in by my stop being here from here, all that covers that loss. So I'm still not in a losing position overall. I'm still going to win out overall. Now, if it would have pulled back and hit my stop up here, would I have been a little disappointed? Sure. Would I have been upset? No. Disappointed and upset are 2 different things. I can't fault the market for what it is going to do and what it does. The only thing I can place any fault in is myself. Have I done my job? Now, if I would have, and you guys can measure these out, but if you looked at that and said, well, I want to get in here, but put my stop here, I'm going to lose X amount of dollars, okay, then you might have only put on 2 instead of 5 or 3 or 4 or 1, and that's okay. Because if I would have put on 1, what am I saying to myself? Well, I'm going to put in 1 because I like what I've already locked in. I'm not willing to give any more of it back. Okay, so that's all decisions you guys have to make. If you need help with that, I'll help you. You guys know I will. But those are all individual decisions. But again, there's a difference. If it pulls all the way back to hit my stop, which is up here, I'm going to be disappointed. I'm not going to be upset. I'm not going to be mad. I did what I started out to do. I scaled in. I got in with 5, added 5, closed 10. You know, I'm adding in again. If it pulls back, stops me out, I'm stuck with whatever I get. And as I always tell the kids, or we used to when they were younger, you get what you get and you don't throw a fit. You move on. If it pulled back and hit my stop, am I upset? Not really. Am I disappointed? Sure. I'm disappointed, but we don't know where it's going to go. It also bounced here above a 4-hour zone. So being that it bounced off 4-hour zone, where do I think it might go to? Well, my longer term target is, of course, the zone, through the zone, beyond the zone. Love it to go all that distance. Realistically, where might it go and stall? Right here. So we're thinking about that every step of the way. So I want to look to possibly close out position when it goes down. I'm just going to trail them over. I did not close here. And this is something I did. It went here. And that's when I'm looking going, when it started pulling back, I'm going, I should have closed out part of it. I did not. I just didn't close it. And I thought, if it gets back down there, I might close. I didn't do it again. I sat through the whole entire sideways movement. Breaking of a trend line. When it broke the trend line, remember what I said about trend lines? What do we do on a trend line break? A trend line break, and I covered this on the last one. I'll cover it again and again and again. A trend line break is not enough reason for us to say that the trend is over, because trend lines are straight. There's no flexibility to them. The market moves, as you can see. How does the market move? It moves up and down. It moves in waves. It does not move linear. It bounces and respects trend lines till what? Till it has nowhere to go. This was more of a sideways movement. What time is it? I mean, look at what time that is. 1 o'clock here. So the break was at 1:20 p.m. That's after our trading session. And we're not looking to get in anyways, are we? So that break happened because it has nowhere to go. Okay? If the market momentum is not going to push it up and the market momentum is not going to push it down, it has to go sideways. So unfortunately, we sit through it. If it has to go sideways because it's not going to move up, not going to move down, what does that mean to us? It's going to push through the trend line. Does that mean that's a signal to go long? No. It means that it had nowhere else to go. I mean, it literally had nowhere else to go. We're done. Okay? We were done with these big moves in here. And again, this is around lunchtime. Where's 12 o'clock? So right there's 11:12. You guys know I don't like to take, I've done some, but I don't like to take them after 12. I don't think anybody, especially if you're learning, you want to trade during the busiest times in the market. The busiest times in the market are the first 3 hours of all the markets. So I feel everybody should get used to doing that first. And this right here is part of why. People will come in, and this was at what? 1:30. So that's around 124, this green candle. 121. So it breaks your trend line that it's been respecting all morning. We've been trading it short. And that one little green candle pops through the trend line, and everybody's bailing. They're closing out their shorts, and they're getting in long. Why? Because it broke the trend line. But you have to look deeper, and you have to look at why did it break the trend line? Did the market push it? Oh, look, the bullish side of the market took over and pushed it through the trend line. No, it didn't. Time did. Time did nowhere to go, because the bullish side of the market's not even in play. It's lunchtime here in the US. It's after 12. You're getting lunchtime, and then you get into the afternoon. Guess what? The London boys are done. Okay? Again, we look at the first 3 hours. You got the first 3 hours of the London session, and then you get into their lunchtime. At their lunchtime, what time is it here in the US? Time to wake up. So the US, the big boys, the fund managers, the heavy hitters, the banks, the market makers that are here in the US, guess when they're trading? Even their bots, even the programs they write to trade, they have trade during the busiest times. If the stock market opens at 9:30 Eastern, guess when I want to trade the indices? With the stock market. So I only do the first 2 hours, 9:30 to 11:30. But around noon's when you should think, I need to start looking to quit taking new entries. This is not the time to take it long, because again, the London boys, they're done for the day. They've all gone home. The heavy hitters over there are gone. The US market, the heavy hitters, the big boys that are trading. And yes, they trade manually, but they also have bots they've, designed and scripts they've wrote to trade for them that trade the way they do. And they just sit and monitor those. They don't let them go unchecked. Trust me. Because they're trading with big volume. But if that's shut down for lunch, then why would I want to look to take a trade? So afternoon, we don't look to take an entry. Again, don't look at that as a bullish break of a trend line. That is nothing more than sideways time. It's just time. It's time to go through the trend line because I have nowhere else to go. Okay? I mean, you just have nowhere to go. The trend line's in my way. I've got to go through it. Sorry, guys. Got to go through it. Look at it like that. The market's really sorry, but it has to make a decision. And there's not enough bullish side of the market to take it up, not enough bearish side of the market to take it down. We're going to go through your trend line with a mediocre break. Okay. If it's going to be a reversal, we need to see what? Higher highs and higher lows. Right now, we've been in a bearish market, lower lows, lower highs. It's broken. We need to see higher highs and higher lows for a setup. And again, we're not even looking to trade because of time, what time it is. All right. But we can hold our runners. Why not? So what I did was I closed out 5 on the break. I went ahead and did that. Because basically it's like, well, it's lunch, after lunch, done good. I'll close out 5 runners. We'll leave the rest on. And I just went ahead and closed just in case it did start to set up and then pull up. I just didn't want to give it all back. So I closed out 5 there. It came over, kind of broke through that inside bottom, but we actually have a low here, don't we? We have this low. Remember that? So we actually have that, and we have a couple lows in here that it kind of respected there. So again, we're not playing with the market, but we have runners on. It's okay to leave your runners. Let them go overnight. Let them go over the couple days, weeks. Right here, it gives another push. Nice push. This is last night, market open, reopen, however you want to look at it. Gave a nice bearish push down, past these lows, and also past this low back here. And we're still holding short. It has not shown us any bullish confirmation at all. None whatsoever. Now it has moved, finally, to the 4-hour zone. At that point, we still know it could break and continue through the 4-hour zone. So I don't bail on my runners. I only want to switch position if I see some kind of bullish structure forming. Because until that time, the market has not shown me, so far the market has not shown me other than breaking this trend line. But again, that was more time. That's the only indication that I had that we could possibly even think about, closing out and going the other direction. But what do we need to see after this? We need to see higher highs, higher lows form, which we didn't. So we're still push into the zone. So these can be tricky. Yeah, this is tricky to hold your to be patient and hold these are real tricky because it does you have to have a lot of discipline. You have to be willing to watch it go up and down, and you have to be willing to risk part of your gains that you've already locked in by moving your stop or could lock in. Pulls into the zone. It's made a lower low. New low. What do? We can adjust or stop. If we did. Now this is where the orders moved as we added on. Remember that? You'll see why here in a minute. But every time you add on to a position, your orders will drop. But there's our push, more bearish confirmation. So what about going back to the trend line? Wait a minute, our trend line was here. It broke our trend line, but it's continued short because the bearish move was not over. And this is where the trend lines, this is why you have, if you use a trend line, they're so strict and straight, you can't bend the trend line. So what can you do to help keep you from taking? A lot of people call that a fake out. I hate the word fake out. You'll never hear me use the word fake out. It's not a fake out. It broke the trend line because of time. It had nowhere to go. Look at where the high is. It never broke this high. So all it was a pullback. It was a pullback that had nowhere to go but through the trend line. Moved sideways, pull back a little further, but never broke this high. Never once did it break that high. Okay, this hit around the same price. So a lot of people will look at that and say, well, it faked me out. It's a fake out. Well, it looks like a fake out because you're calling that trend line like the rule of, I don't know what you want, God, thunder, Thor, whatever. It's stone, set in stone. We got writing in stone that if it breaks a trend line, it's going to reverse. Well, it's not until you see the structure build up. If you see higher highs and higher lows build up, yes, you got structure. Yes, it's probably turning, but that's the only point in time. So again, sometimes you'll see where on some of these runners, I don't even have a trend line on there. That's my last one, I believe. I don't have one out because I would have been moving it along as it goes. As it keeps pushing sideways, well, you're moving your trend line every time it drops. Every time it drops, like it drops past this support, well, then you would move that trend line on out. You'd swing it on over, okay? All right, so it pushed down and then pulls back. Where did it pull back to? On this pullback right here, I didn't do it in here anywhere. I didn't anywhere in here. Does anyone know why? It's too early in the day. This is late in the day. This is like 6 o'clock. So it's the start of the next session. I don't trade right when the new session starts. I like to wait till later in the evening session, during the Asian session. So that 8, 9, 10 o'clock. 8, 9, 10 o'clock, I'm looking to get into a trade or looking to add to a position. That's it. I don't like doing it like right at 6 o'clock. So I wasn't adding in here. I'm not trading then. I'm not even looking at the chart. So here's where I added. I added in here that was 9:21 p.m. That's where I added because I had seen it pull up here, which is what? This was the inside bottom on the left of the chart. Remember, it was the inside of this swing right here. That's that wick that I had marked. So when it pulled up to test that, red candles down, I come in, saw that. I'm like, okay, it's there. It's back at that support and resistance level. I'll go ahead and throw 10 on this time because I've locked in enough on the whole trade to cover the 10. Remember, we're way up here. We got in way up there. Where was the original? Oh, the original was way up here. Original entry up here. So I've locked in quite a bit. I guess I shrunk that in too far. So I added 10 on. Look at how much we have locked in and riding still on our bonuses. We still have more than that on, but these were the 10 that were added. Zoom that back out. All right. So again, added 10 here. That's why my orders moved down because we added 10. Order moved down. Stops moved down as well. I didn't move my stop to where the entry was, but notice where did I close out? Part of that. I closed out part right there. because it's a 4-hour zone. All right. So you got to pay respect to the 4-hour zone. I don't know, guys. Pay respects to the zone. All right. I paid respect to the zone. Let's just call it that. So I'm respecting what the zone represents. How's that? So the zone is a 4-hour zone. It's off of a wick on a 4-hour time frame. The start and stop of a wick, or the low and high, the start and the low, or the start and the high, whichever way it's going. But that is a 4-hour wick that we're marking by a zone. Do I have to bail on my trade? No, I'm still short. I'm still short. I'm holding through stuff like this. It hit the zone. Am I freaking out? No, I'll pay your dues to the zone. There you go. That's what I did. Got in with the new 10, closed 6 of the new 10 out. I paid my respects to the zone for what it is. I said, okay, zone, you might not go lower than this. Platinum may not go lower. Let me pay my respects, paid my 6 contracts, closed them out, recognizing what the zone represents. But I left 4 of the 10 on. More runners. More runners. We're still short on it from the day before. It pulls back up. This is what I had to sit through. What are we looking for on possible reversals? Let's say you had a line here. It pulls up. You're like, I'm out. It's definitely going to respect the zone now. I mean, look at it back here. It kind of broke through, pulled up. Nice move up, high, pulled down, broke through this line. Green candle, boom. I'm closing out all of what I worked hard to do. Well, I'm not, because I'm waiting on higher highs and higher lows. What does it do here? That's a high. Is it a higher high? No, it's not. It's at the same price level as over here, not even up to this wick. So, yes, it's formed a high. It's forming a high. However, not a higher high. So it comes back and it comes back here, pulls back up, pulls back down to our line, pulls back up. What are we saying? Okay, that looks like a swing low. That definitely, at this point where it's making these candles, that definitely is a higher low. That's great. Is that full on bear or bullish structure? No. A higher low is only part of the equation. What do we have to see in bullish structure? We have to see a higher high and a higher low. This is not a higher high. It's a high back to this price. Again, if this would have pulled up in here and then pulled back here, we would have had a higher low, higher high. We didn't get that. This respected this area. So we have a higher low, but we never got our higher high until it pulled here. So we only have half the equation here. We need the other. We need it to break the highs. So this move up, what does it do? There's our higher high. This is the little details. That's why you'll hear most people say, stay to one instrument until you've mastered it, learned it, till you're successful. It's because this is what it takes. It's not easy, guys. And it's not as easy as just throwing a couple moving averages on the chart or whatever. You can pick any strategy under the sun and they all work, but you have to pay attention to what the market's telling you. So the market here was telling me nothing but a high, nothing but a test of this level. Yep, we got a higher low. That's only part of the equation. I need to see a higher high. We got a higher high. So what are we looking after a higher high? Do we enter on that? No, that's an extension of price. We don't want to enter. We want to wait for a pullback and a green candle. What do we want to wait for a pullback to? Well, how about we mark this? Whoops. How about we mark this, price point in here, and we want it to pull back and test that level. Does it? It does. It pulls back to test that level. We're waiting on a 3-minute candle. What happens? Well, it fell apart. I mean, it just fell apart. It did not, price did not respect this area. It respected it here, but on this, it just dropped back through. So are we getting in? No. If we would have seen it pull back and then a green candle, yeah, there's your bounce. What's your first target? It better be over here. It better be this inside bottom because it was respected here and here. That better be your closed partial. And if that closed partial is too close, if you got a big green candle here and you got in on, well, guess what? If that's too close for you to close partial, then stay out of the trade. Don't hope and pray that it's going to go past that because it may not. The odds are not in your favor. Let's put it that way. That if that was a big green candle and you get in, the odds aren't in your favor that it's going to break this support and resistance level. Okay. So again, if there's not enough profit to close partial, stay out. All right. But we're still on our short because why? Even though it went up to make a higher high than back here. So we have the higher low, have the higher high. We don't get in on extension. We're going to wait for it to pull back. It never pulls back, never green candle. Plus, we're still in an overall downtrend from yesterday. It's messing with the 4-hour zone. Can't deny it. We have to respect the 4-hour zone. We're okay with that. So it starts dropping. Goes through the 4-hour zone, breaks through the middle of it, sideways for a bit, and then look at what it does. Respect. Respect. It's respecting the top of the 4-hour zone. So these are the levels we're going to use to trail our stop. There's another push. You'll see that's where the stop is right now on the trade. We get another push to the bottom of the zone. Look at what it did at the bottom of the zone. Holds up. Again, if it's down below us, it's support. So we have a support level, which is bottom of the zone, holding up as resistance here and over here and here. Only here does it pull back up through and then push down. Respect, 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 and then it breaks through it again. Now you're going to see something here. I was still in during this pullback here, which again, as I covered in the NASDAQ video earlier, the type of stop management you use plays an important role in the runners. If you trail your stop tight on a current high, then you would have your stop, say, here on this push down right here. A person that trails their stop tight would have had their stop above current high. Okay, again, this push down, trader one with the tight stop would have it above a current high, maybe somewhere like that, or maybe even somewhere like that. And you could see that trader got stopped out. There's going to be another trader that trails his an extra stop back. So he's been trailing on this push down. That second trader keeps his trade back here. Well, then he gets, stopped back out on the healthy pullback. We're going to get minor pullbacks, and then we get the big healthy one. And normally we get the big healthy one before what? Before that right there. And after you see that time and time again, you're going to know that's why you're going to leave your stop out. Mine was actually up here. I had moved it to protect against any loss. You move it to protect against any loss, and then it gave a healthy pullback and moved on. I'm looking to see nice, healthy move. You'll see where mine's at, right at the zone still. I believe we're in here somewhere, aren't we? And as you look at these moves, as you go back and look or whatever, when you're talking about your stop management, just look at where you would normally pull your stop. Again, here we see a big healthy push down. And again, with the stops, someone's going to, have their stop and move it more aggressive than others. You just have to decide. So someone's stop's going to be there. And then during this move, it pushes down, your stop's here. It pulls back during this move right here, past the lows. They say, okay, we're making a lower low. They move their stop here. And then it comes down. Well, then here, it pushes what? It pushes past the low. Okay, making a new low, and you moved your stop here. And you're stopped out. Someone else is stopped out here because they're leaving it one back. And then someone else's stop is here or possibly up here. So again, you have to decide which, everybody's a little different, where your stop is, or maybe even one up here. Stop placement. Pick one. Trader 1, 2, 3, 4. And that's where we are now. So mine's way up there. I am not moving it. What are we up? It's up about 6.5. I'm not going to move it tonight. I'm going to leave it where it is. I have it there for a reason. We have lows in here. And you got to look at this as kind of your line of defense. I'm hoping that holds up. I'm hoping that throughout the night, if it retraces further, and even during the London session before non-farm tomorrow, I hope that this line holds up as my line of defense. Okay? Is it going to? I don't know. I want to stay in this through non-farm if I can. Because if I'm on the right side of it, we're in short, okay, with 6 contracts. If I'm on the right side of things tomorrow, when non-farm pans out, I don't care where it is. It could be all the way back up here by my stop. But if a non-farm comes out and it goes short, I'm already in. So again, I've been in since Wednesday in these trades. Bitcoin and gold just today on this. All right. So that's all I got on that one. But that's how you got to manage your stop, guys. And ride some runners. See if you can leave 1 or 2 on. And it doesn't matter if you're trading live demo, you're mimicking your live on your demo. So I've also got a couple on Top Step, but Top Step is not near as big of an account. So the Top Step account, I just got taken out of Bitcoin on a pullback. Yeah. So I was in gold and Bitcoin still and smaller. So you can link all these accounts together. You can actually talk to your broker and link a demo account to a live account. Some of them are willing to do that. It just depends on, I think, how long you've been trading with them and if you have real money with them. So it depends on what platform. But guys, you guys have all kinds of options with this on TradingView. I think is the best platform right now to use, and you can use it with all the brokers like Forex.com and other brokers. You can actually link your accounts from IRAs to live accounts to demo accounts if you want to. So if you're demo trading through one broker, you guys, if you know how to do a little bit of programming, you can actually link other trading accounts. So they're all linked together if you want to do that. So you can see what your trades look like through different brokers. So anyways, that's the Platinum trade still running. So all I can say is try, and if you get into a trade tonight, tomorrow morning before non-farm, it's up to you guys if you want to try and let it ride through non-farm. Non-farm will take you out if you're on the wrong side of it, and we don't know which way it's going to go. So you can do your best at guessing which way it's going to go. Some people don't like trading non-farm at all or leaving runners on. So it's really, it depends on the trader. I think I saw someone last month said they just closed out all their trades before non-farm release come out. That's fine. Others leave runners on. These runners can be on and it can go the opposite way. We're pretty much short on everything right now. I think everybody is. So it could completely go and take us out of all the short trades, and it could continue to go short after that. So we don't know what it's going to do. So the best thing you can do is give it room. If it's in our direction and it keeps going, and if you look back through history of non-farm and any news release, a lot of them, especially Forex pairs, you'll see where a lot of times it'll move in one direction and then it'll turn and just go all the way back to where it started before non-farm, or even further than that, and do a reversal. So the best thing you can do is either stay out of the way and not trade at all, close your positions before non-farm, move your stops before non-farm, or just leave your stops where they are and give it the massive room that and respect that it deserves. So don't think that you're going to pull your stops tight and stay in a non-farm move if it wicks, like these shorts. You wouldn't think that you would pull your stop tight and think, okay, well, I'm thinking non-farm is going to go short. I'm already in it short. I'm going to pull my stop tight. You have to give it the respect it deserves. And unfortunately, it wicks both ways. Your spread will widen. I don't know if anyone's actually looked at the buy and sell side or bid and ask price, but you'll see that spreads widen during news. And I've seen people straddle news where they're in a buy and a sell, hoping that they're taking in a trade, and then it keeps going and they close out their other pending order the opposite way, and they're in the trade and they're making money. Unfortunately, what happens during non-farm is a lot of times the spreads will widen, and what it does is actually takes you in both trades and takes you out of both trades within like 1 or 2 seconds. So it's not recommended straddling. I know people have done that. I've done it in the past. If you were to try that, it has to be in a personal account or demo account. Funded accounts, you'll get they'll close your account. So you can't do news straddling, and I don't really like people doing it, guys. If you do happen to do it, if you let's say you put on 2 micros for a regular trade, then you would put on 1 each way. And if your stops, where your stops can be, you're just going to get stopped out. So it's real risky. So either close them out, move your stops to protect some of your profit, or just leave them where they are and let it be as it be. So we'll see what happens tomorrow. All right. Hope you guys enjoyed. I will talk to you later.